what if the way you are thinking about managing your money is one of the ways you are sabotaging the success of your business and your freedom? Well, needless to say, most entrepreneurs talk a lot about income and revenue, but not so much about how much has left after all the expenses and taxes and anything else, you know. So what about actually flipping the script on how you think about paying yourself? And maybe you should pay yourself first. And so I'm so super excited to have a guest, an expert on the philosophy of managing money, finances, called Freedom First. This is so exciting for me personally, but I wanted to bring this information to you as well. And welcome to the new episode. I'm Edita, and this is from Grind to Grace podcast, the podcast for the alternative entrepreneur, the entrepreneur who is ready to flip the script, challenge the norms, and choose freedom first, when freedom is not a destination, when freedom is the path. Because when you stop grinding for freedom and start creating a business that feels like freedom in the process, success just tags along. So let's make this the new standard in the industry, the norm for yourself, for your children, and for humanity. And the big question I'm asking on this podcast is how to do it. We know there is more than one thing to look at. Business is a combination of all sorts of aspects. And so we are looking into those aspects. And that's what I ask my guests about. And today I have the amazing Deb with me to help me out and to help us out with this important question about managing money. And I have to say, well, I've heard, my first time I heard about Profit First a few years ago now, right? And it was quite a surprise to me that you can actually do it differently, because somehow people just go with a default, with whichever way they heard or learned from their accountants or somewhere else, I don't know. But apparently there is a better way. And that's what we're gonna talk about today. I am so excited to have you on my podcast, Deb. How are you?
Thank you for such a wonderful welcome, Edita. That was quite an explanation. Yeah, that was great. Thank you. Really happy to be here.
Yeah, so when I was thinking of how will I open this podcast, what will I say, how basically it contributes to the whole idea of freedom first. And by the way, on freedom first and profit first, I think I told you in our private conversation that freedom first was inspired by this profit first
Yeah,
idea. It's
yeah,
so
that's amazing.
right.
Yeah.
And it's so true as well, right? So on that note, how will you explain what Profit First is actually about?
Okay, so Profit First was written by Mike Michalowicz. He's an author, an entrepreneurial author, American, and he had multi-million pound businesses that he just didn't know where his money was going. So he broke his businesses basically because he was spending too much, and he was going to his accountant at the end of the year to look at his accounts and his financial statements, and the accountant would say, well, great, you've made this amount of profit. And he would say, but where is it? Where is it? I don't seem to have it. And the accountant struggled to tell him, because really the accounts are just a snapshot of your business at any one particular time. And that money you've probably already spent in your expenses already, because it's like a cash wheel, isn't it? It comes in and it goes out. It comes in and it goes out. And it was really kind of stressful for him because he didn't know how to keep hold of his money. He wanted to see this profit in real cash terms, because otherwise, what's the point? If you keep on a hamster wheel, you keep going and going and going. You're constantly chasing the sale, but you're not actually rewarding yourself or storing any for the future, because you're just spending what you have coming in. So he started to devise a system for himself where he went back to, and something probably we'll all recognize, is something that our grandparents used to do. Whereas if you remember that your grandfather used to come in and give Granny his wages, and she would take all the money and maybe leave him a little bit for maybe a pint, or well, we call it a pint in the UK, like maybe a beer on a Friday night or something, I don't know. But she would put some in a pot or a biscuit tin or an envelope for food, some in a pot for utilities, so all the bills, some for rent, some maybe for new school shoes. And she would divvy it out. So she would divide it all up, and so that she knew that she had enough for each different area of her expenses, that her housekeeping, basically, what she was going to run the house on. And that's what Mike started doing with his business. So he looked at his income that had coming in, and he decided that he wanted to make a certain amount of profit. And if he was going to make a certain amount of profit, he had to take that profit first, right? So essentially paying himself first. So he devised a scheme where you take your profit first based on a percentage of your turnover. So you're based on the income that you've got coming in. If he wanted to take a certain amount for his owner's pay, he would take that as a percentage. And then he obviously had a percentage based on tax, because that's got to go to the government. And then he tried to run his business on the remainder. So he basically, what he did was he flipped the usual sales equation. So the accounting equation on a profit and loss is sales minus expenses equals profit. Yeah, we all know that. But what that does is that it leaves profit last. With the primacy effect, with primacy law, if you put what you put first, you concentrate on. Okay, so yeah, mind blowing, eh? So what you put first,
It's like
you
the whole
concentrate on.
manifestation thing, you know,
Right,
yeah.
right. Okay, so profit first formula is sales minus profit equals expenses. So we put our profit first, okay? And then we run our businesses on what's left over, okay? So that invokes Parkinson's law, right? So Parkinson's law dictates that whatever is available to us, we consume. So if we think of a dinner plate, okay, if we have a big plate, we'll probably eat everything on the plate, right? Because that's the way we've been brought up. We don't waste anything, do we? You know, food's expensive, people are starving. You need to be grateful for what you have and fill your stomach. But if you have a smaller plate, you're probably just going to eat what's on that smaller plate. So the idea is you reduce what you have. So you run a lean business. You could think of it like deadlines as well. If you were given, oh, you've got 6 months to be able to finish a project, you'd probably leave it to maybe the last month or the last couple of weeks, wouldn't you, to actually finish it? But if you were given a deadline of the end of the week or maybe in a couple of days, you'd probably get that finished because you would put it first to get it finished. Okay, so that's Parkinson's law. So he realized that profit first and using your money has to be based on behavior, okay, and human behavior. And accounts really aren't. I mean, people, unless you're a number, um, what's the opposite of phobic? So whether you're a number nerd, okay, and you love numbers, you're probably not going to look at all your financial statements, your cash flow statements, your spreadsheets, etc. You're probably just going to look at your bank account every day. Who doesn't look at their bank account every day,
Yes.
right? So he started to split up his money. So he would, as the income came in, he would have a pot or a bank for profit, a bank for owner's pay, a bank for tax, and a bank for operating expenses. And he organized his money that way. And we find that when we're organized and we can see clearly what we've got, that releases your mind from stressing and worrying and overthinking. And it gives you peaceful sleep at night because you don't wake up in the middle of the night wondering if you're going to manage a tax bill or pay your team. So that's how it ties into your freedom. It frees you up to be able to
Oh, I love it so much.
have your quality time to yourself and not be thinking of your business finances.
You know, when I first discovered it, it was part of some coaching program. They had an additional training on this, and then I saw it somewhere else, and then I kept seeing it more and more. For me, when I first discovered it, it was like, it wasn't even just accounting. It's bigger than that. It's the
Yeah,
bigger picture, and that it existed. I was obviously, I realized I had this blind spot of the bigger picture of how to actually look. So everybody works on their money mindset, but the way people work on their money mindset is it's the money blogs, you know, like love of money, those kind of things. But this is the practical bigger
yeah,
picture.
yeah.
And I didn't even know it existed, you
No.
know? Like I mean, and it was such a cool thing. And also what you said about um, what you pay attention to grows,
Yes.
right?
Yeah.
And we don't pay, like at the end of the year, everybody does dreads their fine and you know the tax season and all that kind of stuff. And actually I had somebody say she was telling, and actually she was on my podcast too, but she was telling me apart from that, you know, side of the forecast, that last year she didn't realize her husband does for finances, right? And she was so upset at the end of the year. She thought in her mind she was not making money.
Right.
And her husband then did the finances and told her, did you know that you made this and this amount? But all this time,
Yeah.
she lived without knowing it.
Yeah.
How hard is that, right?
Yeah. Yeah.
So,
Yeah.
and the idea of paying yourself first to start with, but also being aware of the positive, you know?
Yeah. Yeah. And we had a client that, because I ran an accountancy practice in the UK, and we had a client that came to us and her business was doing really, really well. But she hadn't paid herself. She hadn't taken any money out of the business at all because she was worried because she didn't understand her numbers and she didn't know if she was able to take any money out of her. She was working so hard and she was getting herself so stressed because she was bringing in the sales, but she was so worried about having a big tax bill or not having enough for her expenses or not being able to reinvest in the business to grow. So she didn't, she put her own salary, her own pay on the back burner. So when I get successful, when I know that I'm successful, I'll pay myself.
I know, right?
Yeah,
And so it goes so hand in hand with the freedom first.
Yeah.
idea as well. Because if you don't even know on the very practical level that you are making profit and you're not paying yourself and you're not allowing yourself to go out and do things you love and have fun and maybe buy better things that will cheer you up and things like that, then
Yeah.
I don't think we can talk about freedom,
No.
you know?
In the you mentioned about rewarding ourselves and paying ourselves. So I mentioned that we have a pot for owner's pay and we have a pot for profit. Okay. Now the profit pot is really exciting because your owner's pay is based on what you need to live for your domestic bills and holidays, etc. So your day-to-day living, where your profit pot is a reward for you being the business owner. Okay. So in the early stages, we say put 50% of your profit into a vault. Okay, so you have a separate bank account that we call the vault account. Okay, and your tax goes into that as well. So every 3 months you put your tax away because if you don't see it, you don't concentrate on it, right? So it doesn't tempt you to dip into it. Yeah, so you put it away, but 50% of your profit pot you take as a reward. And it can, in the beginning, it can be as small as maybe taking yourself off to a coffee shop, having a magazine and a nice coffee, and that's your reward. But if we've got clients that have taken themselves and their family off to New Zealand for a month's holiday with the profit pot that they've accumulated. So it's a reward system for you being the business owner. So not only do you have your owner's pay, you have a reward system. If you have debt, which a lot of people have debt, you can start using your um, part of your profit pot to pay off your debt because that will start to free up your mind as well because you'll have an end date, if you like, because we use the snowball debt system, which gives you basically an end date to be debt free. So that again is all about really removing your stress, releasing your mind, and having your um, your finances organized to a plan, to a profit plan. Um, and it's incredible how once you have a plan like that, your imagination can run wild. So you can be more creative within your business because you can start having a pot for, oh, what if I want to branch out into this market or have a podcast or have a new website or go and speak at an event or attend a conference, invest in myself for personal development training. You can start having these pots for
Mm.
saving for those. And then if you're saving on a regular basis, you can have a date when you can actually do these things. So it really opens up a whole world of opportunities as soon as you have your money organized and you start putting profit first and your owners pay first and yourself first within your business. Because
And
essentially that's
also,
why people
yeah,
have businesses.
and also the idea is such a simple idea, but for whatever reason, people don't do it. Putting away, like paying into the vault or into the separate account for the taxes
Yes.
instead of being hit by this horrible
Oh yeah, we don't want that.
number at the end of the
Yeah.
year. Now and it does, and it's not even that hard when it's increment, like when
No,
it's regular, it doesn't look that big.
no. And I tell you what else it does as well. It makes you focus on your pricing because we found a lot of business owners will price based on what somebody else has priced similar to what they're offering. So if you've got a competitor, they'll look at what the competitor is pricing at and think, okay, so we'll price our thing just below that. Okay. But what they haven't generally done is they haven't worked out what their owner's pay needs to be, so what their domestic living is. They haven't worked out what the tax is going to be in their pricing. They haven't worked out, or they've generally worked out their operating cost because they think as long as I've got something coming in that's covering my outgoings, then I'm in profit. but they forget about the tax element because
Mhm.
that eats into your profit. Okay, because your tax is a percentage of your profit. So if they think they're making 20% or 30% profit, they haven't taken into their consideration their tax. So if you're putting a percentage of your income into a tax pot every time you get paid, and that might be weekly, it might be monthly, you can see that growing, and you know you're secure in the knowledge that that is going to cover your tax bill when your tax bill comes round. So it's not a surprise, and it's not how can I afford this? I thought I was doing okay, and how now can I afford, and where's this cash coming from for the tax bill that keeps us up at night if we don't know, if we haven't got it? Because the last thing you want is red letters from the government. So having that system in place where you just know it's a percentage of what you're earning. And if you find that you're not running your business or it's too tight, you know you're either not selling enough or your prices are too low.
Mhm.
Yeah? So
You
you
know, yeah, the whole, my head is just going, like the whole idea of your finances, not just being I don't know, a must duty that you just need to get sorted at some point. It actually can be a business growth mechanism, you
yeah.
know, serve as a business growth mechanism. It's great, like what you mentioned. Wow, I'm so fascinated by that, So I need to be, I'm kind of following profit first, but not too systematically. So I need to get that sorted soon, I think. So what are other ways business can be helped and freedom can be helped by installing profit first in your business?
Um, so you mentioned growth.
Mhm.
So growth is a type of freedom because if you can grow to a certain level, you can start employing people to do the doing in
Right.
your work, and you can step away. So you can start thinking, because you should really always start your business with the end in mind, okay, and not create what we call a monster business. Now, a monster business is something that you create where you are doing the sales, the marketing, the doing, the delivery, the finances, everything. So you're wearing every single hat. And if you step away from the business, your money stops. Okay. So that's what we don't want to be creating. We want to be creating, you can start off like that, but if you want to start bringing in people or services, you can still outsource. You don't have to bring in employees particularly, but a have the end in mind. How are you going to exit your business, which is ultimate freedom, isn't it? If you can exit
Yeah.
your business with a financially healthy settlement, or have grown a financially healthy savings and investments, then that's how you're going to free yourself at the end of your business. So would you want to continue just at a same size and have a team running it for you? So that's like a bit of a mixture of stick or scale, um, or transfer. So you could transfer your business to your team and step away, or you could still have a particular role if you enjoy it, like consultancy or figurehead marketing. Look at Richard Branson. He still does marketing for Virgin. Okay, but I bet he doesn't do any of the actual running of any of his businesses. Okay. Um, and
I
then
guess you then choose, you're free to choose what you actually
yes,
do
that's
and
right.
what
Yeah,
inspires you.
yeah. So you choose. So you could either sell, you can scale it so it's much bigger, and then sell it off as a franchise, etc. Um, but you've got to get it into that position. So if your cash is organized in your profit pots and that gives you the clarity then to be able to say, okay, what's the next thing we tackle? and we have a system that we follow. So our system is cash flow and profit mastery first, which is profit first. Then we look at your expenses, and we look at your expenses, and we get your expenses as lean as possible. So we have 3 columns on an exercise where you've got absolutely critical to the business. It's nice to have because it saves me time and money. And then the third column is, why am I still paying this? I didn't really realize we're still paying this, and we haven't used this for a number of months. So we lean up our business. So we get rid of the last column, which is why am I still paying for this? We analyze the middle column, which is it saving me time and money? So realistically, is it saving me time so that I can spend more time on the things that are going to grow my business and be more impactful, excuse me, for my business? Or is it saving me a lot of money by paying this small amount? And then that way you're getting rid of the surplus expenses. So that increases your profit, because there's 2 ways to increase profit. One is income, one is expenses. Okay.
Mhm.
So you lower expenses or you increase income. If you can do both, fantastic. And then we look at debt, and we look at paying down your debt. And then we look at growth. Okay. Because once you have dealt with your income, your expenses and your debt, you're now on the path to being truly profitable. So we look at growth programs, okay? And growth models can be anything like adding in digital assets, passive income. We say passive income. Passive income is generally build it and then sell it, isn't it? Nothing's exactly passive. But you could partner with other people, access other networks, branch into other markets, franchise your business, add other products and services into your business. And all these things now, because you've got organization in your finances, you can start budgeting for your growth program. Okay. And when you start looking at that, that's when you mentioned you can you monitor your performance on each of these areas. So that's your key performance indicators and your metrics. And it sounds all very practical, but it ends up just flowing into each other. The whole system just flows into each
Yeah.
other, and you end up with risk management. Okay, have a plan of what if happens, emergency planning, and then exit. And you can end up with a plan, a roadmap that will take you to your ultimate freedom, because people generally start a business to give them time, to give them money, to give them autonomy so they can be their own boss. And that is freedom in your working life, isn't it?
Yeah.
You do have to escape at some point.
Yes, I love it how profit first is the overall philosophy rather than just, well, I don't think that entrepreneurs are proactive about how they handle their finances. It's
Oh,
one of the areas that needs to be separate. We'll do whatever the government is saying, we'll follow those rules, we'll do whatever the accountant is saying, and we won't. But this is actually the overall philosophy that needs to be embraced proactively in
yeah,
order to create way more space
yeah,
in your business, right?
yeah.
What do you think? So I'm wondering, what happened at some point? Why do you think that issue exists? Why do you think the formula is sales minus expenses equals profit? What happened?
It wasn't built for business owners. It was a way that the tax and the accountants could work out how much tax people owed for the taxman. So, I mean, the accounts double entry is hundreds of years old. It was actually devised by monks in the UK, right? And they were tax collectors for the church. All right. So that's because in the UK, the churches owned the parishes, which are like villages or areas, and they collected the tax on behalf of the people. And they devised what we call the double entry system. So the double entry system is what goes in must come out. So if you've got money coming into your bank, where has it come out from? And it's generally come out of people's purses. So they would list all the, all the villagers or the parishioners it's who's it's come out of, and it's come into the tax man's bag of coins, wasn't it? So that's double entry. All right. And when it went back out of the tax man and went to the church or to the Sherwood, what was it called? The Sheriff of Nottingham, or whoever they were paying the taxes to, um, it would come out of the bank in the ledger and into the sheriff's ledger. So that's why we call them bookkeeping, because it was lots of books.
Right.
Okay, so that's the system that was devised so that they could work out who collected tax. And so when they look at, and the accounts, the financial statements, they then started asking businesses to prove that this is the only money that they've got coming in. All right, so then they had to write their sales, how much they've got going out, and what their profit was. And that's because it's the profit that it's like a sum, it's like a maths problem. So you've got add in, take away, equals. Okay. And then that's the figure at the bottom that they would say, well, you need to give
Kind of
us
makes
a
sense,
certain
right?
percentage, right? So it wasn't ever built for business owners. It was built
Yeah,
for the tax.
that's
So
so
we need
interesting.
a system. And that's why grandparents knew that when they gave the money, she had her own system where she put some in a biscuit tin for rent, some for food, some for new shoes, some for utilities. And we had our own system. But then the banking system that we used, right, had started doing checks and moving away from cash, started doing checks and started using bank cards and PIN numbers. And we all of a sudden didn't have that money physically to put in pots. So we had lost the system. I still remember it because I'm old enough, for that system. And clearly Mike Michaelich is, because he said, I'm going back to that system so I understand where my money's going, which
It's
is
so
essentially.
funny how we forget as a society, we forget how everything started.
Mm,
We adopt things and we don't realize, like we get conditioned and we don't even question
no.
those things, So that's about everything, And the other thing I'm thinking, like if you look at your regular accountant, they are not necessarily business minded.
No.
They run their little narrow function.
Yeah.
They add numbers together
Yeah.
and that's it, and they don't really think about how it plays into overall business growth and ecosystem and so on. So I think that's the other blind spot for entrepreneurs. And I want listeners to hear this, that when you when you look for a finance person, I guess you really want to see if they are business minded, if they have the mindset other than just putting numbers in the equations and coming up with calculations. At best, you see, maybe they will give you advice where you could maybe cut corners or save somewhere, and that's it usually, right?
Yeah. I mean, there's actually a business journey and accountant journey. Okay. So this is what I tell clients, and we've written blogs on this. So what generally happens is, well, first I'll address you. Accountants haven't been taught how to run a business. Okay, they've done their accountancy exams, and like anybody else that starts a business, they've started a business based on what everybody else is doing. Okay, um, so but the journey with a new business owner, somebody starts a business and they're really good at what they do, and they market it. They find their ideal client, and they market and they start delivering. And then they realize, oh, I need to fill in a tax return. Okay, so because they're at the very beginning of their journey, they'll ask their friends, relatives, any other business colleagues, who do you use for an accountant, right? And they will generally then choose the cheapest because resources are limited. They're right at the beginning of the journey. Okay. And they'll choose the cheapest accountant. And that's fine because all they need at the point at that starting point, so they think, is their tax return being submitted. Okay. So what they've done is they've generally chosen an accountant that's the cheapest tax return submitter. And like any business, the cheaper you sell, the more you have to sell. Okay. And accountants are no different.
Yeah.
So if they're doing cheap tax returns, they've got thousands of clients because if they're only charging you £100 to do a tax return or £25 to do a tax return, whatever it is, how many do they need to have an income that then provides them with a lifestyle, covers their overheads, and gives them tax and profit? Thousands. Right? So they haven't got the time. They're literally just churning out tax returns after tax returns. They don't have the time to look at your numbers, decide where you can save, um, see where you're going wrong. Okay, so then the business owner thinks, okay, so they get to the point where I need to know how much I want to save. I need to save for tax. Because I don't want a surprise like last time. I need to know how much I can be taking out of my business. I need to know how to work out my profit, how to price, um, and how to grow. Can I afford a new van? Can I afford? I don't know because I don't understand my numbers. So they start thinking that their accountant's a bit rubbish, right, or not very good because they're not giving them the information that they need. But they've chosen the cheapest tax return whose business is to just do tax returns. So they
Yes.
start then thinking, okay, so I'm going to look, the frustration sets in. I'm going to look for a new accountant because this one is not giving me the information that I need. And that's when they start to think, okay, maybe I need to pay a bit more for the information that I need. And if you pay a bit more, you're going to get an accountant as long as you do your due diligence and find the accountants that are interested in looking into your business and helping you. Um, and that's when they start to move to what we call business advisors. And they are accountants, but they've got more business advisory. But because they're charging more, they don't have to have so many clients. They don't have to just do the cheap, quick work to make a living. They can actually give you the time and devotion that they need.
Yeah, yeah. So this is such a good insight. Watch who you select and don't go for the cheapest one,
That's right.
right? Yeah, which most people, probably a lot of people default to that because they think it's just a function of adding up the numbers.
Yeah.
So who cares,
Yeah.
Yeah, so I think that some listeners might be thinking, I am just starting out, I'm not there yet. Is this for me? How should I start? I'm hardly making anything. What could you say to somebody like that?
I would say it's never too early to start profit first. Okay. Because the earlier you start, the less mistakes you'll make. Okay. Because you'll have clarity on your numbers. If you think, I mean, we work to particular ratios. So that's another great thing about Mike McCallerich. He looked at lots of sizes of businesses and they worked out the a standard share, if you like, of in percentages for each different type of area for your business. So, for instance, if your business is under 250,000 turnover, okay, your share should be, or your what we call your target allocation percentages, okay, we call them TAPs. So target allocation percentages should be 50% should be owner's pay, right?
That is so controversial
Right,
because most people will think, that the smaller
yeah,
I am, the less I get.
right. But that's what you want to aim for, okay? So that's for any business under 250,000 turnover. And that's startup businesses, all right? So you should be looking at 50% owner's pay, 30% operating costs, 15% tax, and that leaves 5% for profit, okay? And I say leaves, okay? But we take that first. And the reason we take it, we have it as a small amount because it's not very much to take out of your business when you're starting out, because we all know you have a break-even point. So you're going to start off with quite a lot of costs. Yeah, and to take out a large amount of profit is going to inhibit you grow. So we start off with a small amount, which is 5%. Okay. And that's your target. You can start smaller. You can start with 1, and then the next quarter go up to 2, and then the next quarter go up to 3%. And so you hit 5%. But you shouldn't really be more than 5% profit under 250K. So if we look at, okay, so you need to be taking out 50% for owner's pay. That's a really easy percentage to start with. So you can look at all your domestic bills, right? Work out what it is that you need to take out of your business, right? So all your domestic bills, your holidays, birthdays, all the things that you're going to have to live on, okay? And that's 50%. So your sales target is 100%. You just double it, right? So that's what, right? So it's quite easy, isn't it? If you find that you can't run your business on 30% of that, then you use your operating expenses, the 30% as your base, and you add on 70%, and that's your sales target.
So your utility bills, so when you say utility bills, it's business related utility.
No, so
Yes.
owner's pay should be 50%. Okay.
And that includes paying out for utility bills, like, the travel,
Yes, anything that you personally are going to have to pay to live. Okay. Any operating costs are anything that any business expenses that you put through the business that will be on that profit and loss. Okay, so it's the business expenses that you have to spend to bring in your income for your business. Okay, your owner's pay is what you need to take out to live personally. Right, so that's the first starting point, and that's a great starting point to work out if your business is viable. Okay, because can you run your business so that it pays for your own, because that's got to be a basic need, as a basic need to have a roof over your head, to feed yourself, to keep yourself warm, etc. So you can't start your business, or you shouldn't start your business not knowing if it's going to be able to pay you as a person.
yeah.
Right? So if you've got, so we're looking at 50% for owner's pay, all right? So that's for your domestic. So you double it to see your sales revenue target for your business. If you can't run your business on 30% of that sales target, you use your operating expenses, which is 30% as the base. So you add 70% to that, and that becomes your sales target. All right. So now you can work out, okay, so say you have a sales target of 600,000, all right? No, that's not going to work because we're looking at 250K. So say 100,000, all right? Let's keep it simple. So 100,000, that means you got 50,000 of your owner's pay, right? 30,000 is operating expenses. What if how much is the product that you're going to sell? You can work out now, you've got to make 100,000 What is the product or service? How much do you want to price that at? If you want to sell it at £1,000 each, that's 100 clients you need. So that's your sales target. If you want to sell it at £500, that's 200 you need to sell to reach your 100,000 target. So do you see how it's profit first is invaluable at the beginning of your business journey? So there's no earlier time to there's no time too early to install profit first, because you can give yourself your sales targets. You can have something to aim towards, and you can know if that business is viable. If you can run your household, or if you need to take out 50,000, you know that you need to bring in 100,000 that year, and then
Well,
you've got your pricing.
how about somebody who is just starting off? Like for me, when I first started years ago, I actually, for a while, I lived off my savings, which I luckily had.
Yep.
And for quite a while, I was not making wasn't breaking even. I was running ads, was only learning how to run ads, and I was like putting money in, putting money in, putting money in. What's the advice there?
If you've got profit first and you're running profit first, understand that profit first will only work properly if you are making a profit. Okay.
Okay. Mm-hmm.
Because otherwise, what you end up doing is you end up taking out of one pot to pay another. So
Mm-hmm.
if you need 50,000 to live on, and you're not bringing in enough to pay yourself 50,000, where's the money going to come from? You end up taking it out of your tax pot or your profit pot or your operating expenses pot. So you can graduate. So what you would do is you would say, okay, if you're running on savings, you would give yourself a sliding scale of how, like a small amount of target each month to at
Mm-hmm.
least pay back your savings that you're spending.
Mm-hmm.
Yeah. And then you can start adding in your owner's pay but it'll be incremental sales targets rather than a jump to, if you've got savings. Some people start on a bank loan. Okay. And you're going to
Right.
have to increase, you're going to have to um, account for that bank payment back. Do the same with your own savings. Okay. Treat it like a bank loan. So you're
Yeah,
paying
yeah,
it back,
good. Mm-hmm.
because otherwise you're in danger of just chasing the sale. And if you keep just chasing the sale and you're not running a system like this, you haven't accounted for tax, profit, and your pricing might not be right. You might never be profitable, because if you're not keeping an eye on your numbers, then you you're quite easily susceptible to, say, shiny object syndrome, where you've got money coming in and think, oh, that'll be really good. That looks amazing. That's another course I can buy. And you end up spending um, what you have coming in, and you end up in the situation we were talking about earlier, where
Or
you haven't put away for your tax.
yeah, or the other way around, right? I think that was the case for me. So I don't think I ever had shiny object problem. I think for me it was the opposite, sort of like because this money was a bit of an unknown. So
Yeah.
I had to deal with scarcity problems,
Okay. Yeah.
I guess,
Yeah.
right?
Yeah.
That's what it was. I was maybe it would have been good for me to invest somewhere in a
Yes.
coach or in a mentor, but I didn't
Yes.
because I didn't have the full view or, a way to manage my using savings and my income, that picture. And I was always in that fear that I'm gonna run out of money,
Right.
you
Yeah.
know.
So we had a client. I'll give you an example of one of our clients. He came to us. He was in a complete mess. Okay, his bookkeeping was all over the place. He'd only been paying his bookkeeper £100 a month. All right. He had a £450,000 turnover. He was an engineering company, so fixing supermarket refrigerators. He had a team of 6 with vans. He had been on the wrong VAT scheme for 4 years, and he had no idea how much his tax bill was going to be. Okay, his numbers in his bookkeeping software were a complete mess. All right. So we took him on, and we took 3 months to sort out all his money, and then as soon as we sorted out all his money in his bookkeeping, we set him up on Profit First. Okay. And then all of a sudden he could see exactly what he had for what. All right. And he hadn't been taking on any other contracts. He hadn't been able to take any extra team members on. He was just living in scarcity mode because he had no idea, right, what was going on with his
Exactly.
numbers, right?
Mhm.
Within 18 months, he went from 450,000 turnover to 1.1 million. He had savings for his tax, so he didn't have to worry about that. He was putting um, a large amount of money in for his pension, which he had not provided for before, which he was doing through his business. He had an engineer come to him completely by surprise and ask for a job because he wanted to work for his firm. And he knew instantly that he could afford a new van, tools, equipment, and he would take him on because of his experience. And if he took this guy on, he could then win bigger contracts. Okay. So he took him on without having to ask because we taught him how to make his own decisions based on Profit First. He moved into bigger premises and employed a marketing lady and his own bookkeeper so that he realized the value of doing his books every day at that kind of size of a business. Okay, and he bought a cold storage unit for his training for his guys. So that was within 18 months, and that's just from it, sorting out his bookkeeping and in implementing Profit First. And then he just expanded. He just said, great, I know where my money is. We can take some money from this and put it in a new pot for this. I can afford new vans. I can afford bigger premises, because he could see exactly how much his pots were growing.
With that.
Yeah, I mean, it's from somebody that was stuck and didn't dare grow to somebody that just got wings and flew.
All was needed is to actually get a full picture.
Yes, yes,
Knowing you, and I don't know, like, so we had this animation when I was growing, there was an animation for kids, where I think the central figure was a goat, and he was annoying people with, not people, other animals around, with how he knew how to count, right? And
right.
then I can't remember exactly, something happened and they all had to run onto this boat to get saved, right? And when they ended up, and there was a captain on the boat, and when they all were on the boat started drowning, right? Sinking. And then the captain, wait, what are you doing? This boat cannot take more than 10 animals, right? Who can count, And so this little goat, me, and he counted all the animals on the boat, and there were exactly 10 animals on the boat, and the boat stopped sinking.
Amazing.
Because they got clear on the number.
Yeah, yeah, that's right.
It's just such a ridiculous, like funny, kind of crazy story, right? But what you
Yeah,
were saying now, like it's just the clarity, just
yeah,
being clear.
yeah. So there's like a journey that we explain to our new clients is we take you from confusion, right, to clarity, to control, then confidence. And we teach them once
And
we
then
get
to
them from confusion.
freedom. Yeah.
Yeah, clarity, profit first, control. Okay, so now you can start doing the things you want and start branching out into different areas. And then confidence is, okay, so now we've taught you the system to be able to make your own business decisions. Confidence is you don't need to be on the phone to us all the time asking if you can afford these things, because you have your system of clarity.
Yeah, so I think it's more than obvious, right? If you are not totally, completely clear on your finances, your money, and your different buckets every day, or whenever you want to have a look, right?
Yeah.
There is no freedom, because
No.
then in your mind, things will be going out, like thoughts will be coming, there will be this blind spot, the unknown, uncertainty.
That's it.
So you can't talk about freedom. Oh my God,
Yeah.
this is beautiful.
Yeah. I mean, and it's behavioral as well. So you don't have to be looking at your bookkeeping software or your financial statements or spreadsheets to know this, because you're doing it in your bank. So you look at your bank every day, or every couple of days. Most business owners do. So if you've got, I'm not sure if you have them in Lithuania, or the rest of Europe, but we have banks here that have the main bank, but you can have saving pots
Well, yes,
alongside. And
Revolut.
that's what we suggest you
That's what
do.
you said, because it was gonna be my next question. So what
Right.
would you suggest? Separate, different,
Yeah.
completely different bank accounts, or just vaults?
In America, they use different bank accounts just because they don't have the feature of the one bank account with the different saving pots. But in the UK, and hopefully
Yeah.
it's in the rest of Europe, yeah, so we have like Starling and Monzo and another couple of banks that are starting to do these pots. So when you open your banking app, you can actually see, you can have one for profit, owners
I
pay,
use
tax,
them.
OPEX. And if
Yeah.
you put the percentages, so the next profit first system is you you can't a lot of the time jump straight into what we call the target allocation percentages. Okay, so you need to look at what your current allocation percentages are.
Mhm.
Okay,
Right.
and we do that by looking at your cash that you've got coming in and seeing what you're spending it on. So we work out, okay, how much are you actually using for operating expenses? How much are you taking out for yourself? How are you putting any away for tax or profit? Okay, and then we incrementally over a period start tweaking your percentages. So we would say, okay, so let's lower your expenses. We'll do the expenses exercise. Let's lower that a bit. And then it frees up some of the percentages that you can now maybe pay yourself with those percentages, or put it into profit or tax, whatever we need to do. And we do that exercise until, and then increase your income until you get to your taps.
Mhm.
So in your bank, what you would do is you would have profit. Maybe it's just 1% at the moment. Maybe you're starting small. So you'd have the title of that pot, profit 1%. And then you'd have operating expenses, might be 45%, for instance. Okay. So you put operating expenses 45%, and then owners pay whatever percentage that is. And as long as it totals up to 100, then you're okay. It means what you've got coming in, you can divvy up for the right pots. But that stops any kind of like brain activity over stressing, because
Exactly.
you've opened your banking app and it just tells you what to do your percentages in, how much to transfer over to your pots. And then we have like a rollout plan, so we know you're going to get, if we continue these exercises for a set period, you'll be able to be at your target allocation and have a really healthy business by 6 months, a year, 18 months, depending on where your starting point is.
Yeah, yeah, very cool, very cool. Okay, so if somebody is listening and they decide, you know what, I need to do this, I need to look differently at my finances and how I manage money, what would be one simple shift they could make like today?
Okay, so open a pot and start putting 1% of your profit in there. Okay, and just watch it grow.
So
Okay.
1% of your income and money put in
Yeah.
the
One.
in
Yeah.
the
Yeah. So every time you get
automatically
paid,
if available, right?
yeah. And you should, if you can't put 1% away for profit, then you've got difficulties in your business. Something is broken in your business because it means even at the end of the year, for instance, when you have your accountant give you your profit and loss in your financial statements, you're not going to have made any profit. It means you're going to have made a loss. And at some point, the wheels are going to come off your business because all you're doing is running on cash flow. Okay, you're not going to have enough for tax. You're not going to have, well, you won't have any tax to pay if you haven't got any profit. But you need to fix other things, and that'll be either your pricing, your how many you're selling, or that you're running too high in expenses. Okay. Or you're not, or your business, in the worst case, your business isn't viable to bring in the income that you need it to bring in based on your current
Mm,
team. So if you're running with yourself, as a solopreneur and you're not able to put 1% away, that means where is the money going? Are you having to take too much of your business income to survive for your own domestic? Are you not selling enough? Have you not got enough capacity? Do you actually need to increase your your prices and lessen the time that you're exchanging for that? Because you don't want burnout. This is a freedom business that we're working towards. Um, so it tells you that there's something wrong if you can't put 1%
I
away.
see.
And it's
Yeah.
it's an opportunity for clarity to address the issues rather than just being blind. Business is too hard to run without it being blindfolded as well. You need to see what's going on.
I know. Stressful, overwhelming.
Yeah,
Yeah,
yeah.
yeah. Very cool. Very cool. So I asked three blitz questions. Every guest I gets asked the same questions. But first, who do you work with? How do you help them, and where can they find you?
Okay, so I'm a profit first professional in the UK. Um, I have just actually, I did run an accountancy practice called the Accounts Ladies. However, I have just transitioned straight into advisory because I love profit first. I don't particularly like tax returns. I love profit first. So I'm building a community and an online program for businesses to follow. Okay. So it's a self-paced. They can buy my book, which is the entry level to the program if they want to read more about how to build
And what kind of
financially build
businesses?
it.
What kind of businesses? Entrepreneurs as well, online businesses, traditional businesses.
Yeah, it's a generic business book, and it's covered all the areas that we have covered. Um, so it's like the roadmap. It's the basic roadmap of how to get. There'll be intricacies for different industries,
Mhm.
but it is a basic business roadmap. It's that how businesses in essence should be healthy and how you can get them healthy. It's kind of like we couldn't find a book that was teaching this, and it came from when people came to us. They were working with business coaches, but they were just chasing the sale and they hadn't got the fundamentals right. Okay. And it could be any business. um, so that's what I'm doing currently. They can reach out at debhalliday.co.uk. Got all my socials on there, everything that I'm up to on there. But yeah, welcome if anybody wants to chat, anyone wants to find out more than happy to talk to people.
Super,
It's what I
super,
do.
super. So now the questions. Um, what change would you like to see in the world?
What change would I like to see in the world? Um, I'd like to see people help each other more, um, rather than being self-serving. Because I think if everybody helped each other, it would be a chain effect. So that's what I would like. I think um, lose the scarcity mindset, embrace the abundance mindset, and do what you can to help your fellow human, really.
Yeah, and that's I believe that's our human nature. In our
Yeah.
human natures, something happens, some scarcity, like you mentioned, mindset happens, and people don't do that. It's so much more expensive when we do things together.
Yeah.
Yeah, super.
Yeah.
Okay, so the next one is what impact would you personally like to create in the world?
So I want to remove the stress from business owners. So because businesses can be so freeing, people start a business to have time freedom, money freedom, autonomy, be their own bosses, achieve their dreams. I want people to learn how to use their business targets, profit targets to align with their lifestyle goals. That's what I want to do. And it's because that's what they started a business to do. So that's what I'm trying to teach people.
Amazing, right? So we are kind of you are on one end, generating that money, and you are on the other end, how to manage it the way that actually also helps embrace the freedom. Love it, love it. And so the last one is when you hear from grind to grace, what goes through your mind?
I love it. I love that title. I was like, yes, that's what we're trying to do. Because if people knew what it was like to start a business, how many of us would start? You can quite easily get caught in the grind. So from grind to grace, absolutely. I love the whole flow aspect. I try and live by that myself. And that was from nearly hitting burnout, doing everything myself in my early journey, to now I take each day, and if my body's telling me I'm not feeling it, then I'll go into my garden, I'll do some gardening, I'll take myself outside. If I decide to, because I will work, I get really excited about work and I will just be all consumed, but I'm enjoying it. But then as long as I allow myself to enjoy the rest as well, then I just listen to that. And to me, that's freedom. It's not having to go and be somewhere and do something, regardless of whether you are in the right mental state to do it. Just because somebody else is paying you to do that. I think that's what business should be about. So I love the grind to grace. I think
Thank
that's
you.
the ultimate and dream, isn't it?
Yes, and the what you said is the whole point. Like we talk about location freedom, the freedom in terms of the physical world, but we want to be free on the inside to be able to properly create and grow the business, to then actually have location, time, whatever, freedom and flexibility and your own economy and all sorts of things.
Yeah.
Yeah, love it. Thank you. Okay, so thank you so much for being here. It was so interesting. I could be asking 50 more questions for sure. You know?
Well, you're always welcome.
Yeah, thank you. Thank you. So it's such a refreshing topic as well. Not only in terms, about dreaming about money, but also actually the practicality of handling it. So super, super cool. And for the listener, I wouldn't believe if you didn't get a lot of takeaways here and it wasn't useful in one way or another. So I really hope it was. And so share, let's spread this. More entrepreneurs need to hear about this different way of handling your finances, because because it plays into your freedom.
It
And
does.
yeah, and so thanks very much for listening, and I'll talk to you again next week.